Hi everyone, welcome back to my channel. So this was part 2 video of banking awareness section, guys. So in this video I will cover 2 to 3 chapters in this banking awareness section. So let's get started. In last video we also covered ombudsman scheme, Reserve Bank of India and its functions. So now onwards we will cover policy rates decided by the RBI and Banking Regulation Act, and also what are the different types of accounts that can be opened in a bank. So in these 3 chapters we will cover in this video. So let's get started. So first one was the policy rates decided by the RBI. So in this, the policy rates are, the current policy rates are policy repo rate, reverse repo rate, bank rate and marginal standing facility, it also called MSF, and cash reserve ratio, it's also called CRR, and statutory liquidity ratio, it's also called SLR. So let's one by one we will discuss our present policy rates decided by the RBI. So this is very important, guys. So in these 6 rates, any one of the given in our mains examinations, so IBPS RRB clerk or IBPS RRB PO or IBPS clerk. So in these 3 examination, any of the policy rate was given by the examiner, so be concentrate on it. So the first one was repo rate. So for today, so it means our present, the policy rate decided by the RBI for repo rate was 5.40. okay, 5.40, and the reverse repo rate was 3.35% and bank rate was 5.65%, and marginal standing facility, it means MSF was 5.15% and CRR was 4.50% and SLR was 18%. So let's once again, I will write it on another side. So the first one was repo rate. So repo rate was 5.40%. okay. Next, reverse repo rate 3.35%, and next bank rate. So this was 5.65%. okay. Next, MSF. So this is 5.15%. and CRR 4.50% and SLR was 18%. So these 6 rates are very important. So once again we will read it. Repo rate was 5.40, reverse repo rate was 3.35%. So I think it's 25 basis points cut, guy. So I think 5.40 minus 25 basis point. So this is was, and bank rate was 5.65% and MSF was 5.15% and CRR was 4.50% and SLR was 18%. So in these repo rates decreased by 25 basis points in this our present rates. okay, 25 basis points. So repo rate was 5.40, reverse repo rate is 3.35. so I will check it once again in tomorrow video. I will confirm this 3.35 or other. So until you will go with 3.35%, and bank rate was 5.65% and MSF was 5.15% and CRR was 4.50% and SLR was 18%. So let's get abbreviate the each and every rate. So the first one was repo rate. So this was 5.40%. This is very important. That's why I mentioned and I read it in many more times. So repo rate was 5.40%. So what was the repo rate? Repo rate is the rate of interest which is levied on short-term loans taken by the commercial banks from RBI. So in this, the short-term loans taken by the commercial banks from RBI. So for that purpose, this repo rate was considered. The rate of repo rate present was 5.40. And next we will go to the reverse repo rate. So this is exactly opposite to the repo rate. So in this repo rate, commercial banks taken short-term loans from RBI. But in this reverse repo rate, so the RBI is taken from the commercial banks. Okay. So this was 3.35%, I think. And next we will go to the SLR, statutory liquidity ratio. So this is the amount of commercial banks needed to maintain in the form of cash or gold or government approved securities, bonds. So therefore, before providing the credit to its customers. So it is determined as percentage of total net demand and time liabilities. Okay. So SLR is based on the liquidity ratio as the amount of commercial banks needs to maintain in the form of cash or gold or else bonds. And next, bank rate. So this bank rate is defined as the SLR ratio was 18% and the bank rate was 5.65%. So what was the bank rate? It is defined by the section 49 under the RBI Act 1934 as the standard rate at which RBI is prepared to buy or rediscount or exchange of any commercial papers on the purchase of this act. Next, cash reserve ratio, this was 4.50%. CRR refers to the ratio of banks current reserve balances with RBI with reference to the banks. And finally, MSF was 5.15%. So this is very important, especially these policy rates are very important, so don't neglect this. So after that we will go to the liquidity adjustment facility. So this was introduced by the RBI during the June 2000 in the phases to ensure for smooth transaction purpose and keeping pace with the technology's upgradation purpose. For these two purposes, the liquidity adjustment facility was introduced by the Reserve Bank of India. Okay. And the next one was next chapter, that was Banking Regulation Act 1949. It may schedule commercial banks and other type of banks. So this was passed as the Banking Companies Act 1949, come into the force 49 Act 1934. Okay, this act is not applicable for primary agriculture credit societies, cooperative land mortgage banks and non-agriculture primary societies. So this Banking Regulation Act was, which of the sections are not applicable was to primary agriculture credit societies, cooperative land mortgage banks and non-agriculture primary credit societies. So in these three sections, this Banking Regulation Act was not applicable. Okay, next, Schedule Bank. What was the Schedule Bank? As per the section 2E, the RBI Act, Schedule Bank means bank who is included in the second schedule of RBI Act 1934. So that bank is called as the Schedule Bank. The Schedule Bank should satisfy the condition. So for that Schedule Bank, what was the limitations and what was the qualification for the Schedule Bank means? The Schedule Bank should satisfy the conditions which include the paid up capital and reserve requirement of not less than 5 lakh. Okay. So this is some of the requirements for Schedule Bank. A bank that is not included in the second schedule RBI is called non-schedule. Schedule Bank means included in the second schedule of RBI Act 1934. Otherwise, they are not. They are called as a non-scheduled banks. So overall, the total public sector banks in our present was 12. This is also very important. Last time RRB PO means they asked for small finance banks. What was the total number of small finance banks? So I put the option 11, but I don't know exactly. Just I felt a stone on that question. So that was exactly correct. That was 11. So total public sector banks are 12 and total private sector banks are 21 and total payment banks and small finance banks are 11. Regional rural banks are 43. Foreign banks are 45 and state cooperative banks are 31. Okay, according to the RBI website. So once again, public sector banks are 12, total private sector banks are 21, total payment and small finance banks are 11, regional rural banks are 43, foreign banks are 45 and state cooperative banks are 31. So next we will go to the next chapter, that was what is the different types of accounts that can be opened by the bank. So this is also very important topic in banking awareness. What are the different types of accounts that can be opened in a bank? So the first one was saving bank account, next current deposit account, fixed deposit account and recurring deposit account. We will see the one by one with definitions and what were the qualifications to maintain these accounts for these four accounts. The first one was saving bank account. So what was the saving bank account? So this saving bank account, the rate of interest on saving bank account varies from bank to bank. It means SBI have one rate of interest for saving bank account and other bank, for example Union Bank, have another rate of interest for this saving bank account. So this is varies from bank to bank and also changes from time to time also. It means 1 month they have fixed rate of interest account in one bank and in next month or next year they will change that rate of interest. So that is the definition of saving bank account. So what is that? Saving bank account, the rate of interest on saving bank account varies from bank to bank and also changes from time to time. Okay, the interest is paid on the account holders on daily balance basis. So this interest was paid on the account holders of that particular account balance basis. Okay, so once again, what was a saving bank account? The rate of interest on saving bank account varies from bank to bank and also changes from time to time. So this interest rate is paid on the account holders on the daily basis, daily bank balance basis. Okay, so the next one was current deposit account. So this is saving bank, it varies from bank to bank and also changes from time to time. Its interest rate is based on the daily basis, holders on daily balance basis. Next one was current deposit account. So this account is mainly for big businessmen, companies, institutions, since there are no restrictions on the number of withdrawals from this type of account. So the current deposit account, so this is only for big businesses purpose and companies purpose and institutions purpose, because they have more than, it means a number of withdrawals in each and every day. So that's why this was unlimited for these withdrawals of the money of any account. So that's why this is opted for businesses, companies, institutions, so for etc. So for all these purpose we will use the current deposit account. So the current deposit account means this account is mainly for big businessmen, companies, institutions, since there are no restrictions on the number of withdrawals from this type of account. Okay, from this withdrawal can be made any number of times, it may 1,000, hundreds or whatever it may be, because they have more than, it means made by many number of times, we will use for current deposit account. So this current deposit account only for big businessmen, companies, institutions and colleges, whatever, because it has no restriction on number of withdrawals. That way this is used for these businessmen. And also for the convenience of the account holders, banks also allow withdrawal of amounts in excess of balance of deposit. This facility is known as a overdraft facility. It's also very important. So what is the overdraft facility? For the convenience of the account holders, banks allow withdrawal of amounts in excess of the balance of deposit. So because for the convenience of the account holder, banks allow, it means withdraw of that particular person of that particular bank. So in that account, withdrawal of amounts in excess of the balance deposit. So deposit is greater than the, it means we will withdraw the amount that is greater than our deposit account. So that's why this is called overdraft facility. For the convenience of account holders, banks to allow withdrawal of amounts excess of the balance of deposit. This facility is overdraft facility. Next one was fixed deposit account. So this fixed deposit account is also called as a term deposit account. Money is deposited in a fixed deposit account to earn interest at higher rate. So many of the persons using this fixed deposit account for a certain period of time, it means 5 years, 10 years, 20 years, so whatever, for a long time period they will use for this account, that is fixed deposit account. So this fixed deposit account is also called as a term deposit account. This is used for money is deposited in a fixed deposit account to earn interest rate at a higher rate. So you will thought that we will earn interest at a higher rate, for that purpose we will use for the fixed deposit account. So this is also called once again term deposit account. Okay, the next one was last one, recurring deposit account. So what was the recurring deposit account? The rate of interest allowed on the deposits in this account is higher than the saving bank account. So it means the rate of interest allowed on the deposits in this account is higher than saving bank account, but lower than the rate allowed on the fixed deposit account in the same period, for the same period. It means this recurring deposit account interest is in between, higher than saving bank and also lower than fixed deposit. Okay, so it means recurring deposit account is in between the interest rate of saving bank account and also fixed deposit account, in between of these two. So that is called recurring deposit account. So once again, the rate of interest allowed on the deposits in this account is higher than saving bank and lower than the fixed deposit account. So this is called as the recurring deposit accounts. The minimum is to open a bank account for now was 10 years. So minimum 10 years for each and every person to open their bank account. The maximum interest given by the fixed deposit account. The maximum period of fixed deposit is 10 years and recurring deposit is 10 years. Okay. And the next we will go to the next chapter, that was important points related to the interest rates on bank accounts, differential rate of interest. Okay, this is just a small observation, guys. Interest on saving account is calculated on the daily basis. We will know now all scheduled commercial banks excluding regional rural banks have discretion to offer differential rate of interest based on whether the term deposits or without premature withdrawal facility subjects of the following guidelines. All term deposits individual held singly or jointly 15 lakh. For all deposits other than above banks can. So this is the taxation of saving bank interest rate. Interest earned on saving bank account is not subject to tax deduction. It is exempt up to 10,000 a year. Next, what are the inoperative and dormant accounts? RBI clarified on that saving bank account can be treated as an inoperative account only after 2 years from the date of last credit entry of interest on fixed deposit account. So in this, the Reserve Bank of India clarified as per 30th 10th 2009 that saving bank account can be treated as an inoperative account only after 2 years from the date of the last credit entry of interest on fixed deposit, where fixed deposit interest is being credited to saving bank account or where dividend on shares are being credited. So this is inoperative and dormant account. Next was miscellaneous terms related to the deposits. So this one also a rough clarification. Unclaimed deposits. Okay, the banks are to furnish RBI statutory annual return penalty for delay unclaimed accounts which has not been operated. Demand liabilities. Okay, these are unnecessary things, I think. So just for rough idea, unclaimed means the banks are to furnish to RBI statutory annual return for unclaimed accounts which have not been operated period. So 10 years, which is not been operated more than 10 years. So this is called as a unclaimed deposit shortly. So for unclaimed accounts which have not been operated for period of 10 years or more, so this is called unclaimed deposits. And demand liability means current deposits, current demand liabilities portion of saving deposits. So this is neglected. And next, this was time liabilities means fixed deposit, cash certificate, cumulative audit. So these are the time liabilities. And From tomorrow onwards, we will cover the negotiable instrument act and checks. So this is also very important. And next, financial inclusions initiatives, and about priority sector lending rates, so MSME. So in these 3 chapters I will complete it tomorrow. So thank you for watching this video, guys. Thank you.